Okay, for this video I wanted to go over the newly added IRS Form 7203, which is used to report the S Corporation shareholders' stock and debt basis. So why has the IRS added this form? Well, if you're a shareholder in an S Corporation, you have always been required to adequately track your stock and debt basis because when you prepare your 1040, if you have allocations of losses or if you have cash distributions and you don't have sufficient amount of basis, then you can't take the losses on your tax return, right? You can only take losses to the extent you have basis. Well, they've added this form because they found that taxpayers have done a really poor job at tracking that figure. And so we're having a lot of taxpayers that are passing through S Corp losses when they have no basis to take those losses. And so it's reducing their overall taxable income, and the IRS doesn't like it. Now, if we look at page 2 of Schedule E here, for those of you familiar with this, this is where you would report each K1 that you receive as a shareholder or an owner in a partnership. Now, this Schedule E, historically, there wasn't much information on here, right? So up until 2017, again, you were always required to track your basis, but you were never submitting those worksheets to the IRS. You would keep that stuff internally. And then in 2018, they added this column here, column E, check if basis computation is required, because what they wanted to alert taxpayers to was, okay, if you've got a loss passing through here, you need to attach a basis computation to show us why you're able to take the loss. Well, in spite of even having this notification there and being required to attach a basis worksheet, a lot of taxpayers were still not attaching that. And so that's why the IRS just scrapped all of this and they said, look, what we're going to do now going forward is we're going to just create a completely separate form. And so when you prepare your tax return, if you've got a loss passing through from an S Corp, you've got to include this form. Now, I'm also recommending that you attach this form anyway, even if you don't have losses and you have plenty of basis, because it's always a good idea. Again, you need to track your basis on a rolling year-to-year basis. If you go and sell your S Corporation stock, you want to make sure your basis is accurate, because that's going to ultimately impact how much capital gain you're going to realize on the disposition. So takeaway here, always a good idea to track your basis, and now it's an absolute must that you complete this form if you've got losses passing through from your S Corporation stock. So let's talk about the form itself. It's pretty straightforward. It looks very similar to a lot of basis worksheets that you see with S Corporation tax returns and K1 packages. So part 1 is the shareholder stock basis, and then part 2 is the shareholder's debt basis. Remember, an S Corporation shareholder has debt basis to the extent they have loaned money to the company. So you need to track their equity basis in the stock, and if they have loaned money to the company, they have shareholder debt basis as well. In this example, we're going to be looking at the taxpayer hasn't loaned any money to the S Corp, so he's not going to have any debt basis. So we're only looking at the stock basis. Now, if we flip over to the K1 for our taxpayer here, this is a 2021 K1. We have an S Corporation, we have the shareholders information down here. He owns 30% of the company, and he's being allocated a couple income items here. He's being allocated $421 in ordinary losses, $1 in interest. He's got some charitable contributions passing through there, some line 16C items for non-deductible expenses, and then the QBI information is included in 17B. So this is the K1. If we scroll down here, we can take a look at the basis worksheet that was included with the K1 package. So here we have John's basis worksheet. If you compare this side by side with the 7203, very similar information and format and flow through, right? We have the stock basis computation up here. We have the debt basis down here if it would apply. And so if we look at the top here, John contributed $1,500 in cash to the company in exchange for the stock. So that was his initial capital contribution. He's being allocated interest here. He has some decreases for non-deductible expenses, decreases for the ordinary loss, decreases for the charitable contributions. So when everything is said and done here, when we look at the worksheet that was provided with his K1, his overall shareholder basis at the end of the year is $900. So if we're doing everything correctly, the basis worksheet that we're completing on 7203 should match this, right? It means all the same data. Okay, so we go back to the 7203 here. Again, very similar format, right? We have stock basis at the beginning of the year. This is an initial year corporation for John, so his basis at the start of the year is 0, right? The basis he has from capital contributions, there's that $1,500 number, $1 increase for the interest. Then there's the non-deductible expense piece there, allowable losses and other deductions, right? So that's the charitable contribution amount plus the loss of the passing through on line 1. And so when we do the worksheet, get down to the bottom there, stock basis at the end of the corporation's tax year is $900, right? So that reconciles with the worksheet that was provided with John's K1 package. So, so if we go back to Schedule E Part 2 here, so again, very similar treatment to last year, right? As far as reporting, you would input the name of the corporation, S corporation, EIN. In this case, we do have a non-passive loss that's being pulled through, and so we have to check this box that a basis computation is required. But now, instead of just attaching our own worksheet, traditionally what we would do is you would just PDF print this and attach this to the return, right? You would take the basis worksheet out of the K1 package and attach that. Well, now you're no longer doing that, right? You still have to check this box, but instead of attaching the worksheet, you're just going to go ahead and complete the 7203, and that's going to be filed along with the Form 1040 tax return. Okay, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.